All right, we're live. Pleased to host Ryan Selkis, founder and CEO of Masari. Masari and Ryan in particular is a real tour de force. Ryan is building a business. I've seen him interview leaders in policy, in crypto, back to back at the Masari conference with no notes. He also has a small growing family like myself, so I can appreciate how you balance all that. It's a lot of energy. And Ryan, why don't we start off talking about Vivek? You interview Vivek, and we'll cover other topics too, like Grayscale, the ETF wars, highlights from your crypto theses, the Fair Shake PAC, which I think everyone should be a participant of if you're going to speak at a crypto conference. There's a lot of ground we to cover. We got 55 minutes. Let's start with Vivek. I know you had interviewed him. What are your impressions of where we are now?
I mean, I think he's great. I think he had the most articulate, thorough, pro-crypto platform of any major politician that we've seen on the national stage. I think he is 38. He's brilliant. He's technically savvy. He's eloquent. And I think he's going to have a tremendous future in politics. Now, obviously, disappointed that he dropped out of the race yesterday. We're filming this the day after the Iowa caucuses, and I think it is going to be a crazy year, as presidential election years arguably always are. But I'm struggling to think of a year that was potentially crazier, more incendiary than a Trump-Biden rematch after everything that's happened in the last few years. So I'm not necessarily looking forward to that, but at the same time, I think Vivek as a pro-crypto proxy that will be campaigning for Trump, that is a net positive. And I think people have a misunderstanding of how the White House works. Joe Biden is not sitting in on every single meeting when it comes to economic policy, and certainly not when it comes to crypto, right? That's getting done by folks like Bharat Ramamurthy, who was a former staffer with Elizabeth Warren. He was really the driver at the National Economic Council that was putting forward some of these hostile crypto policies. And then members of the administrative, financial, regulatory apparatus. These are former allies and close friends of Senator Warren. So presidents have allies, and those allies are usually very influential depending on their area of expertise in terms of who is in these positions of power, and then ultimately how those policies get enacted. There's a saying in DC, personnel is policy. So I think even for folks in crypto that strongly dislike, to be charitable, Donald Trump, the game at this point is not about whether you like Joe Biden or whether you like Donald Trump. It is how many pro-crypto proxies can we surround these gentlemen with on both sides so that we can ultimately have a fighting shot at good policy in the next administration, and particularly good regulation, without necessarily there being laws that are passed on a bipartisan basis that become law of the land.
Right. People are policy. And you had a great post the other day showing the policy positions under the current administration and the Trump administration. And Brian Brooks was an incredible win for crypto in many ways, not least of which was awarding Anchorage a national bank charter to engage in crypto activity. But it's been mixed, right? So Mnuchin went the other way, and Trump himself has said he's not a big fan of Bitcoin. And I claim that it was really Peter Thiel who had much to do with the influence of some of those positions. Now,
I would say that's more Steve Mnuchin, right? I mean, that tweet was almost drafted by the former Treasury Secretary, who was no fan of Bitcoin. But that's exactly the point, right? I think the game now is to make sure that there is enough influential people in that orbit that ultimately are going to have the potential president's ear and give him good advice about the competitiveness of U.S. tech and where crypto falls in that.
Really, the battle is focused on who would be Treasury Secretary under a Trump administration, because that role and person would set policy and play a key role in selecting all the other key personnel. As well, and as you know, there was a bargain with Biden and Warren in exchange for the endorsement. Warren set essentially a slate of regulators, including Chair Gensler. My read of what you're saying is that you don't expect that bargain to come undone. Therefore, focus on the other side of the aisle and focus on the right leadership that would be around to advance crypto policy. Is that a fair statement?
Yeah, I mean, I think that's fair. I would also say there's plenty of Democrats and kind of career staffers that have been on that side of the fence within crypto that are working in-house or at lobbying firms at some of the different entities. So I hope that they have success if Biden is reelected, and that will be a new administration. Some people will carry over, maybe some alliances will carry over, but that will be a new administration and an opportunity to get new personnel in. I'm just not that optimistic about that side. So for folks that don't want to get bogged down in Trump versus Biden, version 2, I'd say the bigger battle is actually at the Senate. And that's where we can make more progress, because it does look likely, or at least the most probable events, that the Republicans could take the Senate, given how unfavorable the map is for Democrats. And ultimately that would neuter some of Senator Warren's influence, because her influence over Senate banking, which oversees all the financial regulators, would now be in the minority, instead of, in catbird seat that's actually, in control of these nominations from the Senate side.
So the Senate is the key area to focus on. What would you say the recent set of losses for the SEC and now the launch of the Bitcoin ETF means for rule of law?
That's above my pay grade. I think that look, anyone that's been paying attention to me for the last 2 years, 2.5 years, basically since the infrastructure bill, knows that I am disgusted at the way this financial administration in general, things have been going the last couple of years, but specifically to crypto, the way that financial policy and the regulators have been acting is can only be described as going rogue, and trampling on the rule of law, and basically turning many of these regulators into merit regulators, and doing through the side door what they couldn't do through the front door. So I do think there's plenty of evidence for that, and the courts have agreed, and we see incremental evidence each passing day. I don't think that this SEC will approve an Ether ETF this year. I think that is that's a long shot, to put it mildly. I just generally think that the SEC will force Grayscale and others to take them to court again, and any delay tactic that they can use will be employed. And the SEC's argument, I think, for blocking an Ethereum ETF could be with the implementation of staking and the change to Ethereum's consensus mechanism. It is now a bona fide security. So we're gonna, and actually this chart that you're pulling up right now, I think almost acts like a prediction market of sorts for whether this ETF will be approved. So if you start to see this gap widening a bit, that's the market telling you that the confidence level is low that the SEC is going to reverse course here. One dampener to that impact is that people could, in the same breath, look at this as a 9-month shot clock now until the election, where maybe this won't be approved this year, and someone like Chair Gensler and that SEC will continue to be hostile towards additional products. But there's going to be a new administration. Right now, Trump is the marginal favorite, but that seems to be growing versus declining. And then the thought process would be, will that Republican-led administration and set of financial regulators actually let some of these products through? So, a lot of variables here, but I think it's a great thing for the industry that we got this through the courts. I just don't think it should have taken 10 years.
Yeah, no, I agree. And I'm pulling up on this slide here, the Ethereum ETHE versus the other trusts. So on the one hand, the discount has widened. I fully agree. It is like a prediction market in real time. The discount is now 15%, and that's increased from 7%, which is where it was last week. However, it still remains a bid. Part of that's the playing into the discount and betting that will pull to par close at the time of an eventual ETF, which does seem inevitable. Either we get it this year or we get it next year through litigation. So on Ethereum, there's been a lot of discussion around, the narrative of Ethereum. Is it straddled? You mentioned this in your report. I think you might use a different language than straddle per se, a little bit more polite. From my lens, what I see is, one, there's a rotation that's taking place across markets, taking place in every market. You see that in big technology. You see that now in crypto. You have this worst to first dynamic and this first to worst dynamic. And then within crypto, you now have this narrative of eigenlayer, of restaking, which is another idea to really galvanize people around. And there's a big airdrop that's around that. People are excited and motivated there as well. It seems to me like Ethereum is, on the rise. You see that in the price action. We saw, again, I just showed ETHE. Ethereum, I haven't checked today, was at $2,600 not too long ago. Solana's down 20%. What's your view on Ethereum now, given what you've learned since you published the report? Is it kind of the same view? And you took both sides of that as well. You say, here's my view on Ethereum, but by the way, there's a meaner version that could happen. And I'm more in the meaner version camp.
Well, I think we've seen that, right? I mean, I think when I drafted the report, and kind of finished up the draft late November, early December, a lot of this divergence, it was Ethereum was starting to underperform pretty significantly. ETH BTC was coming near, all-time or multi-year lows. Solana was rallying, particularly again off the back of the Breakpoint conference. So that was kind of already in process, and it accelerated through the end of the year. And then at publication, I did in some of the other interviews and commentary say I'd expect some mean reversion. We've seen that this year. ETH's up about 10%. Solana's down. Bitcoin's flat. But it's not by much, right? So I'm not surprised by that in the short term. I do think in the medium term, though, Ethereum has a 60% market cap, market share for network tokens. Right. And this does not seem like a market where you're going to have a power law distribution in those economics versus an oligopoly. So it will look more like mobile phone operating systems or browsers or computer operating systems. Use your tech equivalent than it will search engines, right? So I think that's really the bet on the field. In a declining market or a market where things are cold, with the exception of the macro narrative around Bitcoin, Bitcoin is going to outperform Ethereum. In a market where everything is on fire, Bitcoin might underperform Ethereum, but there's going to be faster horses in these long tail network tokens. And I think that's probably a pretty safe medium term bet, but I wouldn't do a pair trade where you're going long short, because you can get blown out on that sort of thing, like in an instant. Yeah. The other thing to keep in mind is some of these other alternative L1s do have supply overhang. Maybe that's not directly included. Maybe it's technically included in the market cap, but there's some supply dynamic that whether it's liquid tokens that are held by a foundation or some type of vesting contract or anything in between. Ethereum is hard in the sense that it is net deflationary right now. So there is a supply dynamic and issuance dynamic that I think is at play. Which
right. Were you referring to Solana there in terms of the supply unlock in the horizon?
I'm not sure. Sure exactly. I'd have to go back and double check the numbers on Solana, exactly what those supply dynamics are. I think it's relatively low compared to some of the other emerging L1s, right? The assets that are just coming to market, the networks that are just coming to market in this cycle. This is going to be true for Aptos, Celestia. We've got a few network tokens that are yet to launch yet that I think will have the same issues. And that's not necessarily a bad thing, because they're still, single-digit billion-dollar networks versus Ethereum, which is closing on 300 again. But it is real on the margin when you're thinking about net dollars in. So right. We'll see. But those are the dynamics that we're keeping an eye on.
Another observation is Cappy Wood recently made a point that she expects Ethereum would flip in Bitcoin. I was surprised to see her make that comment. By the way, she rotated out of GBTC into BITO. Of course, now she has her own ETF, so she'll rotate into that as well. But narrative does follow price, but price also follows narrative. These things go hand in hand. Curious if you have any reactions on her comment.
The market will decide. Yeah, I mean, I personally don't see it, with the one caveat that Bitcoin's long-term security model is still up for discussion and debate in terms of how secure it actually is. We need to see a fee market emerge in the next 5 to 7 years for Bitcoin in order to make sure that there's adequate economics to the miners that are guaranteeing the security of the network. Otherwise, things come out of balance. And we are just entering that realm where Bitcoin miners are going to be incentivized to the tune of less than 1% of the assets market cap per year after this next halving. And that's, I think, maybe a real tipping point. We'll see how much lower that threshold can go, but at some point the fees are going to have to catch up. Otherwise, you just have no real security.
Yeah, a lot of dynamics around the miners. Obviously, they've been trading down this year. I expect that'll continue. Miners are the very best investment you can make in crypto last year, along with, Solana. Crypto is non-consensus, and the most non-consensus bet within crypto was Solana and the miners, and they did fantastic. But I think crypto equities would trade down. If you've got a view on that. On ultrasound money, was that a distracting narrative for Ethereum? Leading question.
I don't know if it was a distracting narrative. I don't think it's as clean, right? I think it's very much a middle of the bell curve type of meme, but that's something that might arguably resonate really well with the Wall Street crowd that is just starting to think about what is the next asset. So if you're trying to attract financial flows and new investors from that cohort, then I would say Ethereum's narrative makes a little bit more sense. It's got this yield. It's actually used. It's net deflationary. It's got all these kind of fees that are being generated that you can almost model out what the economics of that on-chain company are, for lack of a better term. And the switch to proof of stake makes it less energy intensive. So there is going to be a cohort of financiers that are more inclined to support that and invest in that area than they will Bitcoin, just because of the narrative around proof of work mining. So I don't think that it was a distraction if you take the view of the world as larger than just crypto Twitter. It was certainly a distraction in the more insular community, and I don't think it's clean in narrative. So if you're broadening the pie and crypto is expanding its audiences, I still think that's a great positioning for Ethereum, but mostly on the investment side, not necessarily on the utility side, because the fees are still going to be much higher than what you'd expect in some of these other L2s, where you'd expect more of the value to leak, or some of the alternative L1s.
Right. I mean, I viewed it as a strategic mistake. Like, Bitcoin occupies the digital money space. It's got the Lindy effect. It's advancing on that. It's identified with that. And the questions, as you pointed out, around the security budget. Ethereum looks to me like a decentralized app store, although it's an imperfect analogy because it's also providing settlement and security services for other kinds of apps. And it captures a take rate like the Apple Store. Apple was the most valuable company in the world, still pretty darn valuable. And that to me seems like a better narrative to tell. It's like, hey, look, this is a growth stock. It's a platform play. Venture investors love the word platform play.
The issue is that the Ethereum platform's economics look more like Visa or JP Morgan in terms of fees. So the upside from there, if that is the valuation framework that you have, is 50%, not 5x.
It's higher multiple, but less fee capture because the layer twos would own the end customer. But I believe that.
But my point is, I think it looks more like Visa than Apple, if that's your lens of the world. And I think that's where the competition of all these other network tokens really comes in. And what does that financial industry look like, right? Because what is JP Morgan's market share of banking globally? What is Visa's market share of payments globally?
Right.
That ultimately might be the cap on upside for Ethereum. because so much more of the value and so much more of the flows that happen on chain could leak into these other blockchains.
Well, this is a good segue into your crypto theses, where you talk about tokenization. I'm very passionate about tokenization as well. Tokenization solves a problem of counterparty risk that got me excited about crypto, having lived and worked on Wall Street at 2008 at Merrill Lynch, which had a lot of issues around counterparty risk. And I'm going to quote from your crypto thesis here. Give me a quick moment. Okay, here you go. Say, if you believe as I do that blockchains are accounting innovations at their cores, then all assets will eventually be, quote, crypto assets that trade on public blockchains versus legacy clearing and settlement systems, whether they are utility tokens or security tokens. Over time, the Venn diagram of crypto versus TradFi looks more like a circle. So do you want to elaborate on that? It looks like in your view, the coming together of TradFi and crypto, including the ETFs as one expression of that, is a good thing. And you expect more tokenization to happen.
I think the ETFs are almost the inverse of real world assets, right? I mean, real world assets are just kind of wrappers that trade on these, on these.
TradFi tokenizing crypto instead of crypto tokenizing TradFi.
Yeah, and I think crypto tokenizing TradFi is much more interesting, and that's where the puck is going, right? Yeah. These ETFs, I think, are really just a gateway drug to pull people, from the other side over into crypto and actually just give them the exposure and the incentives to actually play in the sandbox. I think that the holdup has really been a distrust in public blockchains, right? Like this is almost like the redux of the internet intranet debates of the 90s. I know that like, we're in 1993 or whatever. I'm not saying that. I'm not giving that like historical analogy for like what year is it in crypto. But I think the how did corporate entities think about corporate intranets, right, where they had these walled gardens and these highly siloed technology stacks versus like participating in the public internet. And right. And I think if you look back to 2014, 2015, Bitcoin got cold. There was this whole narrative around blockchain, not Bitcoin. 2018, 2019, it was, well, ICOs are interesting, but security token offerings are really significantly more interesting, and that's what we should be thinking about in terms of like clearing and settlement and all these distributed ledger innovations. The buzzwords have changed. I think this time around, though, the difference and maybe the thing that makes real world assets actually stick is going to be crypto wealth diversifying into traditional financial products versus crypto entrepreneurs trying to wrap a financial product with a kind of token wrapper and trade it on chain. It's basically push versus pull, right? We're in a much better position now that there's magnetism to this instead of just trying to push on a string, right? I think Wall Street is going to be heavily incentivized, and these asset management firms and kind of financial product creators are going to be incentivized to build on-chain instruments, because when I sell a token, I keep it in stable coins on Coinbase. Right. Like a lot of people do. So the way that you'll be able to monitor whether real world asset, and tokenization is really blowing up. The first data point that you're going to want to look at is the net stablecoin market cap and what direction that's going over time. But if you start to see that start to tick up higher and higher again, and cumulatively, like that is the reserve for crypto wealth. And then that will ultimately get redeployed, not just in dog tokens, but in actual like yield bearing, like bona fide, like tokenized treasuries, right? And so that's how it starts. And I think it continues to ripple out from there. But Wall Street will look at that 200 billion or 300 billion or kind of wherever the threshold gets in the cycle. And they'll look at that as dry powder that should be deployed, that, some of that might get redeployed into crypto assets, but that there's a whole slug of it that's just waiting to get deployed into treasuries or, kind of cash interest bearing accounts, whatever it is. And then ultimately stocks and bonds and
I fully agree. Yeah, Franklin Templeton, BlackRock are on the case, offering or tending to offer various money market funds. So no, that's happening. It's a new market. You get direct relationship with your end customer. There's no intermediation. BlackRock doesn't want the counterparty risk from 2008. It's great. It's a great piece. One thing I would point out though is that the SEC and current regulatory framework around securities laws are an impediment to broad-based tokenization. Right? I can't do a crowdfunding campaign to go finance, the next Taylor Swift, for example, because it fall under Reg CF and these antiquated crowdfunding rules. So that's something I just want to highlight to people's attention. And I don't know why the Blockchain Association and Coin Center are not focused on this. And the bank regulators, Michael Su is the comptroller of the currency. He runs the most significant national bank regulator, the national bank regulator, the OCC, and he's given half a dozen talks over the last 6 months where he gets tokenization, but he wants it on a centralized chain, not on a decentralized chain, which defeats the purpose. I mean, if you want that, you can use a database. We wrote an op-ed trying to advance the intellectual debate, but do you have a sense of why aren't the policy associations focused on this? If we win on tokenization, if we put not just money on chain, stable coins, but we put yield bearing assets on chain, we put culture on chain, put syndicated royalties on chain, we put brands on chain where people relate to, have a relationship, where they have emotional connection with, then the battle for the ideals of crypto are won. Then the snowball starts to roll.
You're giving policymakers way too much credit. There's no imagination in DC, and the average age in Congress doesn't allow for this type of imagination. So I just don't think, when you think about where the policy associations are spending time, I mean, it's basically just holding down the fort until, the beating.
Until the next election.
Yeah, until the next election. Honestly, I think the best case scenario is not, positive pro-crypto legislation. The best case scenario would be ongoing overreach by the SEC and ultimately a Supreme Court decision that completely eviscerates the SEC and basically takes it back.
Wow. That's really, you want litigation.
Well, I'm not saying that's the most likely path. I said that would be the best case scenario, right? Because you would essentially radically limit the scope and the authority of the SEC in terms of what they were able to do, and frankly, the damage that they were able to do to the economy just through their very existence. So I don't think that is likely, but to your point, there's only so much innovation that we're going to have until either the SEC is slapped down pretty significantly by the courts, or you have some type of positive bipartisan legislation. Right. But having a half-hearted, compromise that just further empowers and emboldens the SEC and creates more paperwork and red tape doesn't really do anything, and doesn't kind of fully, unleash the innovation that we could see otherwise if we were just starting from a blank slate.
Well, the emperor bleeds, right? It's that scene in 300 where they throw the spear. You're a 300 fan, of course you are, right? So, and you see the blood, and then people's perception changes. We haven't seen this kind of litigation with the SEC.
I think, yeah. I mean, I going back to your previous question, I think when I was vocal about some of the overreach in 2021 and 2022, people thought I was crazy, and I am a little bit, but I also know when someone's acting in bad faith, right? I think that the flagrant dishonesty and manipulation and bad
come in and register, especially. I think
that this particular SEC has taken is it is something that is very widely accepted at this point. People might not talk about it as vocally, but I think that there is there has been this moment where the 300 analogy works, because you've seen more traditional finance firms push back on the SEC as well, right? This is not just the crypto
Oh,
craze.
hey, beyond crypto, no one's happy with the SEC.
It is far beyond crypto, and I think that the SEC has lost a ton of credibility. I actually think that the ETF approval itself was another credibility crushing event for the SEC, in the sense that you had the two democratically appointed commissioners alongside Gensler that were not forced by the courts to agree and kind of pass that ETF. They essentially went directly against what the courts had said and ripped up a legal precedent and said it doesn't matter what the courts say or what the statute says. We have now taken it upon ourselves to be a merit regulator, and we've kind of come up with all these arguments why this is a bad thing for the economy and for the public interest. That's not their job, right? But it does kind of show you the direction that some of these administrators are going, and how the regulatory state is trending right now. So full circle, right? That's obviously why and people know, I've been a Vivek supporter, and he's spoken about this quite a bit at length. I think the issue, though, is that is no longer a radical idea. And the overreach from that administrator, the overreach from the FDIC in pursuing choke point 2.0 and basically assassinating some of these crypto-friendly banks in March. I mean, these are just things that happen. They're on the public record. Even Barney Frank from Dodd-Frank, the financial reform bill author, called out publicly and said that Signature was shut down because it was too friendly to crypto. So, these are not just kind of tinfoil hat conspiracy theories. I think that there are really deep-rooted problems at the SEC and some of our financial regulators that are only going to be solved through the courts or through a change in control in political parties.
And some of that was driven by the fact that they had received donations from SBF, and there's an allergic counter reaction to that and to create distance. Then what was not anticipated was the recovery in crypto assets that was so sharp.
Yes.
And the mobilization. They might have anticipated that the public would vomit crypto or reject crypto, and that didn't happen. In fact, if you're in the Gemini Earn or Genesis bankruptcy, FTX, you want in-kind assets. You do not want to be dollarized. It was a miscalculation.
Here's the difference, and the most vocal and strongest minority usually wins. Most people that don't like crypto don't understand it, and they'll say at a cocktail party, "I don't like what it does for the environment," or they'll have a Jamie
Dimon said he doesn't like it, so I don't like it. Right?
Yeah, they'll have a Jamie Dimon level understanding of this is only good for terrorism financing and money laundering, and then they'll never think about it again, right? And that's about as deep as they go. There's not a lot of power in that offhand comment and dismissal, but for folks that are in the industry and you're coming after my livelihood, we're going to come after yours at the polls, right? I think that is, there are battle lines that are being drawn. They're very real, that are, very high stakes, but someone like me and someone like you, we're not going to back down from these positions, because this is literally the companies and our teams and our families that we're talking about, versus someone that just read a one-liner in a Wall Street Journal or New York Times article and has suddenly made up their mind that they don't like this technology.
Right. Do you want to talk about Fairshake? I think it's a good time to get active and get engaged and focus.
Sure. So I'd say there's probably 4 policy related. I mean, there's several others, but I'd say that there's 4 policy initiatives that people should be aware of. One is the Stand With Crypto, more grassroots oriented campaign that Coinbase helped stand up and is now an independent nonprofit that's focused on activating voters in some of these key congressional districts and key states. The second is the Blockchain Association for your company, right? They're the top trade association and kind of member-based org. If folks that are listening want to apply there to support that lobbying effort. Coin Center, obviously, I would put in more of a constitutional vanguard bucket. So I've always compared them almost to the Night's Watch. If you're a Game of Thrones fan,
sure.
The fight for King's Landing, though, that's where Fairshake comes in, right? So this is real brass knuckle electoral politics. This is a team that had a lot of success in the midterms with a 10% budget that they have this year, and ended up being very effective in getting a new crop of pro crypto candidates through a number of congressional races. I think they went 18 for 19 in the general in terms of supporting kind of new candidates, and those candidates, have a really big long-term impact on the trajectory of Congress and how crypto friendly it may be in the future, because incumbents have a 90-95% win rate, right? What we didn't have last time that we do this time is, and I say we, I'm not directly affiliated with them, although I've known the team and supported them, for quite a while. But I think the thing that we as an industry have this time that we didn't have last time is a war chest that is considerable and can actually target some of our biggest opponents as well. So not just finding those open seats and open races and playing in the primaries and trying to get the best pro-crypto person in the Dem side and the Republican side, but we actually have the firepower now to be a deterrent on the one hand, or directly target some of our top adversaries. So Sherrod Brown in Ohio, John Tester in Montana being two of the big ones, but there are certainly others that can be targeted and likely will be targeted now, thanks to the fact that we've actually got our stuff together and are have our backs against the wall a bit. So it's high stakes, but I think it's been a great addition to the crypto policy team and the kind of movement that we have down in DC, and it came not a moment too soon.
Yeah, no, look, I agree. I think, policy matters. It has impact. If you think about crypto as moving money, storing money, programmable money, cross-border money, peer-to-peer money, merchant-to-peer money, all that impinges on half a dozen regulators, dozen different laws, from Bank Secrecy Act to USA Patriot Act to OFAC. So, policy matters, and that's the unlock. You have to get alignment and congruity between the vision and mission of crypto and what that means for human freedom and human sovereignty, and what that means for the unlock, of the sector. So, in the bear markets, people focus on policy. We talk about blockchain. When the bull markets, people forget. Otherwise, you're going to have that upside cap at some point.
Yeah, I think crypto is disruptive and revolutionary in the sense that it kind of brings us back to where we were 30 years ago, right? From a civil liberties standpoint, and we've just ceded too much ground. So I do, I think on the one hand, there is a perception in DC that the crypto community, I don't think from all corners of DC, but I think from some wings, that the crypto community is very obstinate and difficult to deal with, and doesn't care about some of these issues. Of course, we don't want terrorist financing. Of course, we don't want North Korea stealing our assets through these hacks. I mean, crypto folks are victims, in some of these hacks. You don't want to see this tech used for ill, but historically, the way that you catch bad guys is to catch the bad guys, and do the legwork to spot illicit activity and actually, not just have dragnet surveillance that is going to treat everybody as guilty until proven innocent.
Right.
And crypto almost returns us to that norm where you can trace all of these transactions on open ledgers, but it changes the balance of power so that people are innocent until proven guilty again. And because it's so decentralizing, you'd have to literally go and trace every single address and every single self.
Oh yeah, that's analysis and TRM labs that's out there helping.
Yeah, and so obviously powerful people in DC don't like that, but I think we've given way too much deference to a federal system that has failed. Right, these technologies are political, in the sense that they're reestablishing norms around civil liberties and constitution.
They reference rights. They are digital rights.
They're digital rights, and the reason I have been so vocal in the policy scene in DC, you'll hear some people say, "Well, the industry will just get built offshore and internationally." That's not true. I mean, the U.S. If you're going to stage and mount a defense for a new technology, you want to do it from the nation and within the system that actually has some of these highly aligned protections, like encoded in our rule of law and our founding documents. Absolutely. Right? It's in the source code of the U.S. And a lot of that source code is very similar and I think complementary to some of the values that crypto already espouses.
The concept of decentralization is the ethos of the American Republic.
Yes.
And the separation of powers and the enumeration of powers. So what code of law, enumerated powers is the concept of code is law.
Yes.
Here are the functions and subroutines that are authorized by the US government. And the idea of dispersing decision-making to the margin from the state down to the local area, ultimately to the public square, if not a family or an individual, where they have accountability and they bear the benefits and burdens of a decision. So, I mean, that's the premise of decentralization. It really is core to.
Yeah, I struggle with this all the time, and you know this because we catch up offline a bit too. But I struggle with this all the time because I do think I posted something a few weeks ago, Ram, where self-image versus public image. I had the side by side of the
I remember that one. That was a good one.
Of William Wallace from Braveheart on the one side, like self-image, and then the crazy
Irishman.
Crazy Irishman with the knife.
Great movie too. Another good one.
I think there's more than a kernel of truth there, but I just think we're way too deferential to a set of institutions that are clearly underperforming. Like we all know it. You see what Congress's approval rate is. You see what the White House's approval rate is. You see what the financial regulators' approval rates are. You see what the red tape that we have that kind of throughout the country that we have to kind of carve through, and you see the age in Congress, right? Like just everything is essentially going the wrong direction, and yet there's this expectation that we're just going to genuflect to the masters in the Maryland suburbs and
it takes leadership. It takes the great paradox of decentralized technologies that leadership matters more than ever.
Yes.
And you need focal points for leadership. You need centralized focal points of and you listed 4 of them.
Yeah, and look, I think that we should be solving root cause issues as best we can, both cleaning up our own house and then making sure that these technologies are used as a force for good. But there's no good the Patriot Act doesn't work, right? We haven't gotten into fewer wars because of the Patriot Act.
It was meant to sunset when it was passed too. It had a built-in sunset.
There's nothing more permanent than a temporary government program, right? So like it's up for discussion and debate and potentially a Supreme Court challenge whether the third-party doctrine that underpins so much of this financial surveillance in the first place is even constitutional.
So what Ryan is referring to there is the ability of a third party to access, name information on a sender of funds over X dollars, which one would presume be protected by Fourth Amendment, unreasonable search and seizure, and that's private information. But that battle was never contested by the banks, partially because the banks are regulated by the executive.
Well, the real issue is the third-party doctrine was the loophole here around the Fourth Amendment, because if your assets or your data is on a third-party platform, then you don't have a reasonable expectation of privacy. A peer-to-peer financial system, a peer-to-peer set of technology changes that, and that's where I think some of the pushback is. But it's this idea that this is revolutionary as a concept, or anarcho-capitalist, or whatever term they're going to throw at us as a slur. No, it's a return to constitutional protections that are now protected as well as the rule of law. So but I mean, you say this out loud and right, it's you're considered a renegade, if you get into like a corporate setting, particularly in traditional finance, because these banks are appendages of the state and like they're essentially government subsidized monopolies. And I don't mean that in a we don't need the banks, like abolish all the banks, Occupy Wall Street way. I just mean that quite literally in terms of how they make money, right? And kind of where their incentives are and what the composition of their workforces are, right? These are predominantly legal and compliance run entities that have some financial markets experts and some back office technologists, but they're not tech companies. They're not actually innovators so much as entities responsible for system stability and doing what the government ultimately says that they have to do.
Right on, right on. It's great. I get excited about political philosophy. Look, there's just a lot of complacency. Even the Declaration of Independence and constitutional promise and the idea that rights precede government, and we, the people, create a more perfect union to secure our rights. And that's the premise of the American Republic. It's not that rights are given by government. They already exist, and we secure them. And we decide to advance beyond a civil society by creating institutions to help govern and secure them and enforce the law. So this is what you learn. You're supposed to learn in grade school, I guess. But I don't know. People have lost sight of some of that. Well, let's shift back to the thesis. So I love this chart that you shared here about the Kaiko liquidity versus market cap. I think it was a real great alpha drop. And you also mentioned that if you use this framework, you could back into some of your tokens that you own. You're loath to disclose all of your tokens. I think maybe a handful of them. I'm going to go guess that it's Bitcoin, ETH, Doge, Filecoin, Solana. I'm missing one probably in there. You can wink twice if I'm in the right direction. But in any case, do you want to walk us through what this chart is telling us? The liquidity.
I think that was shockingly accurate, to be honest with you. But I think basically what this is, Kaiko does a really good job of this. Kaiko is a partner of Masari. We use them as one of our data sources for aggregating all these different market data feeds. Crypto is unique in the sense that liquidity moves from decentralized exchanges to centralized exchanges. Every pair is different. Every single exchange globally can list an asset, and where that order book density lives really it does change on an asset to asset basis, and sometimes on a month to month basis because of how liquid the system is and how easy it is to port assets from one exchange to the other. Very different from New York Stock Exchange and NASDAQ, right? You list as a public company on one of those exchanges for a reason. That's kind of where a lot of that activity ends up centralizing, and that's one of the reasons that something like the New York Stock Exchange, and ICE is arguably more of a data company than it is a financial services company. If you look at how they make money as a business. A little bit of a digression, but essentially what this chart shows is what the liquidity ranking is versus the market cap ranking. And so the orange here is what the liquidity rank is. So in other words, how little slippage there is, how much real volume there is that would allow for high volume trading or large order sizes relative to the market cap. So you'll see something like Arbitrum or Filecoin, as you mentioned. Anything that has an orange or gold dot that is to the left of this diagonal blue line. That means that there's more liquidity for those assets than there is reflected in the current market cap. So this isn't a perfect proxy, but I do think as you look at the top assets, and I think they do these for 50 assets on a quarterly basis. When you look at this is probably a good proxy for where institutions and liquid funds will ultimately be able to play as the asset class matures. These will be the assets that they're able to roll their sleeves up and actually add exposure to first. I don't think that's necessarily going to happen anytime soon. Again, not an investment recommendation, but it's a good shorthand that I'd love to see back tested.
I like it a lot. One of the things that we do at Lumida is we look at the most liquid pairs on Uniswap. And it's a very similar concept at what you're getting at. And you can see emerging themes and narratives before they're out there in the open. So I thought that was a great alpha drop. I know we have a few minutes left. I'm also pleased to share we're teaming up with Masari, Lumida Wealth, and Masari provide institutional investment capability to DAOs, right? So DAOs are growing their assets again. They're becoming more engaged. And, we at Lumida, we're bringing that institutional endowment style investing. That includes non-custodial investing, working with L1 advisors so the DAO can control their tokens. And then for public equities, we rely on Schwab's. There's no trust requirement on Lumida. You have control over the assets. And Masari provides the analytics. And Masari's got the best analytics in town. We're going to see Masari.ai soon. We use that product every day. It is a killer application. It's how I got to know Ryan initially. Actually, I reached out to Ryan on Twitter. I was like, hey, can I invest in Masari? cold DM. So we're excited to be teaming up with Masari to really level up the quality of investing in the category.
We're excited. Details to come. Obviously, we do a lot of quarterly reporting and analytics for many of these communities, and it's a good match, especially because we have no interest in ever registering with the SEC. So,
well, right, we wrote a critical op-ed against Gensler, but we also co-authored it with the former SEC chair Arthur Levitt, so it helps.
So you're covered.
You have the boxing glove. There's
Exactly.
a weight in there, but it's kind of softened a little bit.
Yeah.
All right, this has been a real treat, a real pleasure. Thank you so much for your time, and most importantly, thank you for your leadership. Keep it up. Until next time, take care.
Thanks so much, Ron.